Today, my name is Dean Crocker. I'm a senior equity analyst with the PSG Wealth research team. Today, I'll be taking you through our latest EIA completed on 91 Asset Management. So just before we get into the crux of it, the executive summary, the group did benefit from a stronger asset under management growth of 7%, benefiting from higher net cash flows. The average fee margin has remained relatively stable over the last two periods at 45.7 bips. However, the last 5 years, it has declined quite substantially. The dividend payout ratio is 74.5%, is well below that of the local peer of Coronation, but does offer an attractive dividend yield of 5.6%. We do see that there may be a potential alignment of the market cap to assets under management relative to that of Coronation's, but as it currently stands, there's quite a deviation between that of 91's and Coro's, which does imply that Coro will trade a premium to 91. With regards to intrinsic value, we have calculated intrinsic value of 55.68 Rand, which implies only about 2.6% upside on the current share price. This is largely impacted by the limited trading history or listed trading history of the group. We have applied a discount which is respective to the dividend yields relative to that of Coro against Coronation's market cap to asset under management and obtained a market cap to asset under management of roughly 1.65% that we applied to the assets under management. In terms of the event, it was their first off results. They did report stronger assets under management, which was fantastic, 7% up, really benefiting from the higher net cash flows. Adjusted net operating profit or adjusted operating profit, which is a measure which management uses, is up 20%, whilst the average fee rate is roughly about 45.7 bips. Dividend of 6.9 pence was declared. As I mentioned, did result in a dividend yield of roughly 5.6%. In terms of the impacts on data release, the market reacted positively. It was up by 2.8% relative to the JSE, which was up only by 1.21%. On a year-to-date basis, it has outperformed the benchmark just by 1.2%, with a year-to-date performance of 27.9%. You can see in the table, given that it has got a very limited trading record, that in the call it a 1 year basis, underperformed, but on a 6 month and shorter, it has outperformed. So in terms of the assessment, it has a very short listings history, which does make it a bit more difficult to value, does add some valuation risk. We have applied a market cap to assets under management of 1.65%. The current is 1.62%, so there's some upside implied, versus Coronation's, which is 2.8%. So you can see there's quite a deviation between its local peer. Now, that 41% discount is just a discount at which 91's dividend payout ratio is relative to that of Coro's, and we applied it to Coro's assets under management or market cap to asset under management, which allowed us to achieve that 1.65% implied market cap to AUM. Consensus implied is 1.6%, thus there is some upside relative to consensus as well. The implied intrinsic value thus is equated to 55.68 Rand, which is only about 2.16% upside. The two tables below just reflect the differences or a nice comparison to 91, Coro and BlackRock against various metrics that we use to value this group. The final table, table 5 at the bottom, just shows you how we calculated the intrinsic value. We have applied a ZAR GB rate of 21.14 Rand to the GB, say it that way, and a market cap to asset under management 1.65, applying that to the asset under management of 1.47, which is a forward market cap. Forward assets under management results in an intrinsic value per share of 55.68. So just in terms of the final remarks, 91 is a great company. They've done quite well in the short period of time. There's only really, I guess you can refer as the JSE as one of the listed peers as well as that of Coronation. If they were to realign towards the Coronation's valuation levels or multiples, you could see significant upside. However, they are trading at a discount due to the fact that their market cap to asset management is that much lower than Coronation's, and their net fee margin that they generate, or the average fee rate that they generate, is also well below that of Coro's. So it does imply that they should trade at a slight discount to Coronation. Nonetheless, there is a potential upside. Dividend payout ratio of 74.5% is still attractive with a yield of 5.6%. If they were to improve that dividend payout ratio closer towards the 90%, which is where the Coronations lie, it could also see some upside in terms of the re-rating and multiples. With all of this in mind, we calculate intrinsic value of 55.68 Rand, which is only about 2.16% upside. Should you wish to place a trade, please speak to your financial advisor. Alternatively, the trading desk would be more than happy to assist. Please take note of the disclaimer. Have a Merry Christmas and great year forward. Thank you.